Hey traders, welcome back to another Sunday video where we prep for the week ahead, and boy is this a big week ahead. We've got the Federal Reserve making their decision on where the interest rates for the United States are going. Are we going to see a 25 basis point cut or a 50 basis point cut? As it seems almost certain that there will be some kind of rate cut this week. And their decision is actually coming down to the wire, which makes this week an incredibly volatile one, to say the very least. Now, as we get started in this video, we're going to be discussing a couple different categories. We're going to be talking about the indices. We'll also take a look at commodities, and we will look at, of course, currencies as well, to see where everything is sort of falling for the week ahead. I'm going to be giving you my thoughts on these things, as well as sharing current trades that I am in and looking to get in as we go into the week ahead. All I ask is that if you enjoy my videos, do me a big favor and hit the thumbs up button on the video down below. Now, as we get started, let me do a little bit of kind of an update here on my personal performance. So this year, between the two accounts that I run, I don't usually share my Robinhood account as it's very boring compared to my main account. But this account is up pretty nicely this year. I wanted to just do a bit of a pulse check on where I am for the year. It's not been my most impressive year, I'm not going to lie, but I'm very overall content with the results, and making money is, good enough for me. This year in this account, we're up about $53,000. And if we take a look at the Webull account, let me just switch over to that. We can pull up Webull here, and there we go. So this is the Webull account year to date. So you can actually see that my more boring account is actually up more than my active account, which it's a bit frustrating. Last year was the exact opposite. My inactive account was like very, very flat. And meanwhile, my active account was up like 30-something%. This year has been good, but it's not been my greatest trading year. Up about 76,000 in this account, up about 50-something thousand in the other, and with still some time remaining in the remainder of this year. So I just wanted to go through that because, I do it regularly on my channel. It is something I do a conscious effort to try and stay transparent, stay real with it. I'm not up hundreds of percents this year. In fact, like I said, this year has been kind of a subpar percentage gain year for me. But gains are gains. And at the end of the day, if you're here for the right reasons, you're here for the long term, you've been doing this with me for the long term, you have a long-term outlook on this stuff, you know just as well as I do that it is about compounding over time and letting it grow. And then, compounding means it kind of accelerates over time. That's the beauty of trading, investing, and managing your money. Anyways, just like to do that because, again, it is important that I keep some level of transparency on this channel. All right, so let's get started. I want to talk a little bit about where the indices are as we go into the potential Fed meeting, where my thoughts are on this, and I want to start with the price action of the S&P 500. So the S&P 500 is just shy of its all-time closing high. In fact, this past week was a very volatile but upward moving week for the S&P 500. And before we even look at the daily chart, check out the weekly and you can kind of see where we're at. So this thing is just clearly bullish, right? Just a lot of green on this chart. And if you put moving averages on it, it looks very bullish. If you look, at this A1 extension zone, you can see we still are kind of confidently in the middle. So we're not quite overbought territory like we started to get in over here in July. So there's some evidence here that I would say that suggests that the S&P 500 totally can continue north. Meaning, again, I think that we could see higher prices from here. That being said, this past week was very, very big, and this coming week is going to be very volatile one way or the other. And I am actually going into this week pretty cash heavy. And I felt like a genius last week when I went into the week cash heavy, because I've been cash heavy for the last 2 weeks or so. And I felt like a genius when the market was dropping like this. Then when the market ripped, I did not feel so genius anymore. I felt actually pretty silly being so cash heavy as the market ripped day after day. But such is trading. And this, again, like I said, I made a positive gain this year, but I've actually underperformed the S&P 500 this year, which is, you're not going to beat it every year. This year has been a bit frustrating. I killed it last year, but this year has been a little bit of a trailing year for me. So with that said, we're coming back up into resistance here. We're coming back up into the all-time highs. And a lot of people are wondering, is this going to just be a clean break? Are we just going to, see the S&P 500 rip through the highs? And I actually think that there's a possibility of that happening. If we take a look at the overall data here, it sort of suggests that the stock market has room to go. In fact, for stock traders, I think this is especially if you're an index trader like myself, thought it might be worth our while to just do a bit of a pulse check on the economic data points for a moment. So let's do it. GDP growth, overall positive. All right, manufacturing PMIs, a little bit of a miss there. And what we're looking at, by the way, is forecasted values versus actual values. We've got this all in the Edge Finder Pro. And if we go through services PMIs, this was strong. Retail sales, all right, strong. We get new data on that this coming week, by the way, on I believe it's Tuesday. CPI year over year has really come down, and even more so than recently forecasted. So that's been good. Core CPI stagnated a little bit, so maybe not a positive there. NFP was not great, so we'll give that an X mark. And unemployment rate did come down, which was a positive. So I'm going to go ahead and go out on a limb here and say that the S&P 500 still looks bullish because most factors here that we look at on the Edge Finder are bullish on the macro side. Now, on the technical side, we've got a little bit of struggle here because we got seasonality. This month seasonally is a weak month. September is historically not the best month for stocks. And so, we're looking at that and we're saying, okay, well, if the S&P 500 wants to rip, it wants to rip. Doesn't matter what seasonality says, but on an average year, September seasonality would suggest it's not a particularly positive year. If you need more evidence of that, if you want to look at that with me here, we've got the data pulled up. So let's do this. We're going to scroll down and we're going to just select S&P 500 here. And what you can see is that on a kind of performance basis, the last 10-year average has come out around minus 1% for the month of September. So we need to consider that, right? We need to consider that we are up 1% for the month of September, where, historically we are down on the month. So with this very volatile week coming, it is possible that there's some sort of disappointment in guidance or some sort of hiccup. And you have to remember that expectations are very high for the Fed to begin cutting rates, for corporate earnings to be bang on strong. And if there is any disappointment there, the S&P 500 could plummet very, very quickly. So that's probably where I want to pause on the S&P 500. Again, I am bullish, but here's what I'm looking for. I'd like to see pullbacks. And if we do get pullbacks, I'll probably be a buyer. And if we don't get pullbacks and we just rip through the highs, then it's kind of just sit on my hands and wait for a possible pullback there. At the end of the day, I am bullish on the S&P 500, but I am not going to chase the S&P 500. It's a wonderful asset that over the long term typically does go up, but it can drop hard and fast. I mean, if you were bullish on this thing from this point, right? So this was back 13th of August. If you watch this thing just go ripping higher for, a few weeks and then watched in just 4 short days, all of those gains get wiped out. You got a good example of how the S&P 500 typically trades. It slowly trails higher and it crashes quickly lower when markets get, skittish. So in terms of S&P 500 analysis, which I know we've spent a good chunk already on, I am bullish, but either looking for pullbacks into support zones or breaks and retests going into this week. If I take any trades on the S&P 500 or gold or the dollar or currency crosses, all of my trades get shared inside of our Discord channel. And if you're not inside there, let me show you what that looks like. So inside of the group, every trade that I take, as well as Frank and Ivan, gets shared for members. And if you're not a member already, you can get information down below in the description. And there is a promo code down there that will get you a nice discount off of our memberships. For subscribers who have made it this far into the video, I want to thank you for your time and watching these videos. And if you'd like to join us in the group, let me just say candidly and genuinely, it is worth the money. It is a very valuable service that we offer. We've worked very hard to make it what it is. It's not a blind copy signal service. It is a service where you can see our trades in full detail, live brokerages, full explanations, screenshots, explanations with everything we do. I'm currently long gold right now. I'm short the Nikkei right now. I'm looking to long indices, but these videos are great for keeping it up with what I'm looking at. But if you want minute-to-minute execution when I take trades sent to your phone with explanations behind each one of them, you may want to consider joining us. There is a nice discount available for subscribers. All of that information will be in the description down below. All right, so let's move on now to gold. So gold is of the things that I've done right this year, right? There's been some things that I've done wrong. There's been some things that I've done right. Pointing out the wrong on the indices, I've been bullish all year, but I've been too quick to get out of some of the good runs, right? In a bull market, it is very wise to just try and stay the course. In a bear market, you got to get out of the way. So this year, I've made some mistakes in the indices, I think, by trying to be too heavy on the timing and just letting a bull market run. On gold, I've not made that mistake. This year, I've been really accurate on gold. In fact, insanely accurate. I have taken so many good trades on gold this year, and it is one of the big winners of my account has been just long gold. I've been long during this time, long during this time. And why was I so quote unquote right about gold this year? Well, if you go back, you can actually go check it out on my channel right around the beginning of January or end of December of last year. I actually put out a full video on my kind of forecast for the year ahead. And during that video, I pointed out that I was incredibly bullish on gold because I thought the Fed was going to cut rates. And that has aged like fine wine. Not everything in that video has aged like fine wine. I was wrong about the Russell 2000 index this year. Thought it was going to be up a lot more. It has not been up very much. It's gone up, but it's not been a monster. So the reason I point that out is I've been very right about gold. I've been not so right about other things. And I don't want to come across as, someone on YouTube that only ever talks about their, smart decisions in the markets, because all of us have silly ones that we don't want to talk about. But I find it to be a value to my audience if I just stay open about what I've done right and what I do wrong. And if you don't like me or you think I'm, an idiot trader or whatever, I honestly don't care, because I'm here doing my thing. And, I'm here for the people that appreciate the transparency and recognize how difficult markets really are. So with that said, let's get back on topic here with gold. So gold here looks really good. In fact, it looks very, very good. I'm very happy that I'm still in this position. I stayed the course on this one, and I was long over here on this pullback. I actually picked it up at I want to say the perfect time, but not really. Perfect time would have been like you bought it right like here and then it just like shot into your direction. The thing with gold here is I've been long in this one, but it's just gone sideways for a number of weeks. And finally, the big break. And I can't complain. I'd rather just sit around and wait for trades to move. I'd rather have waited. I was actually thinking to myself, I'm like, this is going to be really disappointing if this market just tanks after all this time waiting. But nope. We got the nice move. I've got my stop loss now trailed into profit. I trailed a stop into profit based on the 4-hour chart, which looks good here. So again, consolidation finally broke. I took my stop loss, which was initially down here. I trimmed it up into this area here just because, the way this price reacted. I basically said, I don't want to see that break that. That would be, just a point to cut the trade, but didn't get that. And actually with the break through the highs, I decided to finally trail my stop loss confidently into profit. And if we do see a full-blown reversal, it will be a little bit of a sad day, but I'll take it, right? I'm still very happy with, making some profit on this trade. My risk reward here has been very good. But what if we get some sort of higher low this week? What if we get this move? Well, then stop loss is going further into profit, and we're going to try and hold on to this one. I think gold has more room to run. At all-time highs, people are going to call you crazy all over social media. Oh my gosh, Nick, you're long at all-time highs. Shouldn't you be taking profits? I've had that all year long, and all year long, gold has continued to make further all-time highs. Gold is absolutely a monster this year. The fundamentals continue to support it. You've got central banks all around the world buying gold heavily. You've also got central banks around the world cutting their interest rates. The Euro, the ECB cut rates last week. The Fed is expected to cut rates this week. The Bank of England is also on the cusp of cutting rates again. So, you've got all these banks cutting interest rates, which is basically pumping money into the system. It is like, loosening the grip of monetary policy. More money flooding the system means the price of gold goes up relative to all of that printed currency. So I like gold. I'm staying long gold. I've made a whole thing on Friday about if I'm not in this trade right now, what do I do? And the answer is absolutely nothing. If you're waiting, you feel FOMO, feel that FOMO. Let it happen. If you feel FOMO, let it happen. Don't make a silly mistake. Don't go around, obviously none of this is financial advice. Do your own thing. I'm doing my own thing. You shouldn't be looking for advice on YouTube in terms of what you should do in your personal finances. But this is my thought. My opinion, if I'm not in this trade today, like if I wasn't in this position and I wanted to be so bad, all I can do as a prudent trader is mark up entries. Maybe I'm looking here. Maybe I'm waiting to see if this comes all the way back down. I'm waiting for pullbacks if I'm going to look long. I'm not shorting a rally. There's fundamentally so many things that are bullish for gold right now. To me, trying to be short this year has been, just objectively wrong. You've just been so wrong if you've been short all year. You're up 25% on gold. So my point is, what do we do here? Well, we do nothing, right? If you're not in this move, the answer is, for me, I do nothing, right? I wait for pullbacks. I wait to add on dips. I don't chase, right? I'm not buying up here because there's no place to put a healthy stop loss. And I'm not shorting here because this thing is a bull trend, right? We've got a very bullish trend with good fundamental catalysts all around the room. It makes sense to stay long in my view. If I'm already in the trade, I'm trailing a stop on it. But if I'm not in it, I'm looking for pullbacks to be patient. So just wanted to put that out there. A lot of people are going to feel the FOMO. I'm telling you, you got to sit in your FOMO and accept it. You know why I'm saying that? I'm preaching to myself because I'm not in this S&P move and I wish I was. I'm not in the NASDAQ move. I wish I was, right? I'm sitting in it and I'm accepting FOMO, right? You got to you let it happen. All right, next up is the dollar index. Dollar index has been trending lower. How much more room does this thing have to go? I don't know. I mean, I lean more bearish, but it's sort of like, okay, well, we got other central banks cutting rates too. You got other places, seeing economic slowdown. So how weak is the dollar relative to its peers? That's what you got to start asking. Is this thing consistently weaker than the euro when they just cut rates? And for me, the best answer to that is, let's go to the top setups page. Let's look at the calculations here and see. So what I'm going to do here is I'm going to go to category and I'm just going to select major currency pairs. And what we've got is the dollar against all of its major currency peers. By the way, if you want to try out the Edge Finder or you'd like to purchase the Edge Finder, all the information can be found down below in the description. And if you're like, oh, I'd like to try the Edge Finder, let me give you a fair warning. The Edge Finder trials are not free. They're 30 days access for $199. That $199 gets credited towards your final purchase if that's something you're interested in. What, Nick, you don't offer a free trial? No, because here's why. First of all, it's a manual process for us to set up trials. There's some cost incurred our end for people to try the software. And there's a lot of time dedicated by my support team that administers those trials, answers questions along the way, checks in on people who are trying the software. So we do not offer a free trial, but if you're very serious and you'd like to try it for 30 days, it's $199 to try it for 30 days, and that $200 basically gets credited towards your final purchase. If you've watched the videos before and you're like, I love the tool and I want to get access to it, here's I'm giving you a little secret. Down below in the description, you can use the promo code that's listed down there. Go to the website, a1trading.com/edgefinder, and get your copy for a nice subscriber discount. Okay, so anyways, dollar CAD getting a bullish reading, right? So when we compare the US versus Canadian dollar, most of our metrics here are leaning towards the bullish camp for the dollar. Okay. And then on the other side, you got Aussie dollar, which is in neutral. It's the closest thing to a bearish reading, but we're not quite in, outright bear territory. Remember that on the Edge Finder, -5 is a reading that would give us a bearish reading, and 5 or greater, right? Greater than 5 or less than -5, those are going to give you those strong readings. What that basically does is it just says enough of our variables here are leaning in one direction that, again, the Edge Finder kind of has a tilt, if you will, to one direction. So only real reading here is dollar CAD on the USD side of things. So let's just take a quick look at dollar Canadian. And so this is the US dollar versus the Canadian dollar. And this actually ended up being a really nice, actually didn't quite get there. I marked this up as a possible pullback play. The 38.2% retracement didn't quite get into that range. But for the dollar CAD, a couple things to look for here, I would say, would be going into this week. If I was to get long dollar CAD, it would probably be a pullback into this 38.2% retracement or a breakout through the highs and a retest there. So I do like dollar CAD on the long side. That's the one currency trade that I may be looking to take advantage of this coming week. What we can also do is we can switch over to indices if we wanted to look at the indices. I do still have a short position on the Nikkei, so bit of a heads up on the Nikkei trade. Where is it? I don't think it's doing very well. It's also not doing horrendous, but here's the Nikkei trade. So I'm short the Nikkei. It's just kind of gone a bit sideways here for the last week or so, but I can't complain because the US indices were up a ton this past week. So with the Nikkei kind of going flat, I'll take that on an up week for the S&P. Typically, indices do sort of move together. So with that said, I'm going to hold on to this trade. If we take out the highs, time to stop out very quick. I'm looking for a quick move lower on the Nikkei. If we don't get it, I got to get out of there, right? So I do think that the short side is favorable for the short term based on the Edgefinder's -7 reading. When taking a look at seasonality, retail positioning, we take a look at the trend to the downside. GDP stats out of Japan missed, right? So retail sales also not super impressive, and jobs data also a little bit light. So taking a look at the Nikkei, a little bit bearish there. We are getting a bullish reading on the Russell 2000. Don't even give me a second to consider that. I love buying the Russell when I can. The Russell is small cap US stocks. It's one that I was very bullish on at the beginning of this year, and that idea has been not great. So if I go back to, here's the beginning of the year, right? The Russell is up, but it's up a meager 5.7% when the S&P 500 is up like 15, 16%. So, it's one of those things. The Russell, I think, has plenty of room to go. I'm watching this out of the gate next week. I'd like to mark this chart up and basically look for potential opportunities to get long the Russell into this rate cut cycle. I think that that's kind of where I want to be going into the coming year. I may have been early to the idea this year, but I'd love to see if we can get kind of some breakouts, some retests, and perhaps look for Russell continuation plays. So I do like the Russell quite a bit. It's one of my top setups currently, obviously with literally the top setups page scanning for it. So we take a look at indices. I also like the Dow Jones, NASDAQ, and S&P I'm watching. I may look at that NASDAQ if it pops into positive territory, but on the COT report, you can see that these two were a bit favorable. Let's go inspect that. So COT was like in the, by the way, what is COT? The commitment of traders data is institutional money flow. What are they buying? What are they selling? We can pull that up here and we can get the latest reading. So they bought the Russell, they bought the dollar, right? They bought Dow, they bought yen, platinum, silver, South African rand, copper. Those were the buys for the week by institutional money. We can also see oil. The Nikkei got sold. Like to see that since I'm short. The Canadian dollar, the Kiwi dollar, the Australian dollar, the pound, the euro, gold got sold, the 10-year treasury, CHF, and they sold a little bit of NASDAQ, Bitcoin, and SPX. By the way, again, this is all part of the Edgefinder Pro. If you are newer to my videos and you made it this far, first of all, hello, thank you for hanging out. Usually it's the regulars that stick around this long. We're 23 minutes into the video or whatever. I just want to say hello and welcome you to my channel. Consider subscribing if you're new, but also just a bit about context of this channel. So I'm a trader, but I'm also an entrepreneur. I've started this software company called A1 Trading, which builds all these tools for traders. And yes, I do sell them. I'm an evil content creator that sells stuff, can't possibly be trading real accounts, but I'm being, satirical or sarcastic here. I do actually trade. I share broker statements all the time, but I also run a company that builds tools for traders. And if you want access to it, all of it's in the description down below. Yes, I'm hustling, but yes, we offer very, very powerful tools to enhance trading careers, and that's what I use in my own. So with that said, keeping an eye on the COT report, gold still overall very bullish, silver, pound, US dollar, and yen. Those are sort of your more bullish assets. And then you got the Canadian dollar, Swiss franc, 10-year treasuries, SPX, and Australian dollar more on the bearish side. So going into this week, I am watching for, the Russell. I'm watching for the NASDAQ. I'm watching for the Dow Jones. Dow Jones is of the US indices, the favorite here. So we'll have to keep an eye on that and go from there. But again, what I'm looking for, just to give you guys a bit of a broader horizon for the next few months, I am so curious, now that the Fed is going to start cutting rates, I'm so curious to see how economic data starts to fall. What I'm talking about specifically is the U.S. output, is the U.S. government output, the economic output, GDP growth. Is this going to stay strong? Are services PMIs and manufacturing PMIs, are these data points going to stay strong? Of course, I'll keep you guys updated on the channel with what I'm finding, but I also want to see where the labor market is. Are we going to see the labor market hold in there while we cut rates? That would be an indicator of a soft landing, which would be very, very bullish for stocks. So I kind of lean in that direction. Doesn't seem like the stock market is, or the economy is crashing. And if the economy can hang in there and earnings can keep going, I think stocks can go higher. but we have to keep a close eye on it in case that story sours. With that said, guys, I hope that helps prepare you for the week ahead. Those are some things that I am watching and currently trading. If this video was helpful to you, consider hitting the thumbs up button. Also, last thing I will say, if you're looking for a better brokerage, there are several that have wonderful sign-up perks for our subscribers here on this channel down below in the description. Again, those are sign-up perks that we've worked out so that on behalf of our subscribers here, basically, or on these brokers that have partnered with my channel, they have some great sign-up perks available to you guys at no extra cost. They are referral links, so if you choose to use them, you'll be helping out my channel, and I appreciate it very much. Have a great week ahead. See you guys.